Well, hi folks. Welcome to this week's video update. This is going to be a short week. We've got Thanksgiving on Thursday, and Friday, I think the stock markets are open for half the day. The currency markets and most brokers will be open throughout the period, so there'll be plenty of opportunity to trade. But we're going to have a look at the stock market, what's going to happen in the stock market, what I think is going to happen, what I think is going to happen in the dollar index, and we'll just take it from there very simply and play it off that. So we've got a very important support level on the dollar index at 105, and we've got key resistance levels coming up on the stock markets, the Nasdaq and the S&P. So let's have a look at those on the charts and see where I think we could go during this week. Monday, Tuesday, Wednesday, going to be interesting. And then we've got I think some more Fed speak coming up on Wednesday, and we've got some one or two bits of data coming up. But it's going to be a short week. And traditionally, the markets have rallied during this week of Thanksgiving. So let's have a look at the charts. So it's always good to have a broad outline or a plan for your trading before the week starts. And so this is my kind of plan. It doesn't mean the plan's going to work out, but at least it's a plan. And the simpler, the better, really. So we want to keep a simple plan in mind. And if that plan goes awry or things don't go according to plan, then we can start to reevaluate as the week progresses. But let's start off with a plan. And if things fit into the plan, it's all pretty good and pretty smooth sailing. And if the plan happens to have to change because we break out of certain levels or different news comes out or something like that, then we can change the plan. Let's have a look at the. So I've got the majors up here and the gold market and the US stock markets. I'm not going to take too long about it, but let's start with the dollar index because we're primarily interested in currencies. And you can see how the dollar index, and you have a look at some of my previous videos on this and my updates on Twitter. But this level here, this level at 105, is really, really important for a couple of reasons, because we've pulled back very dramatically. The dollar is actually oversold, believe it or not. And we've come down to this level, which was key resistance over there and over here, and key support. And it's a very clear and logical area for the market to try and change direction. We've also got the 200-day moving average just at that level, precisely at that level, in fact. It's almost too good to be true. And we've bounced off there, not very convincingly, during the last few days. So this is a daily chart. So you can see really when we touched there, that was 4 trading days ago, we bounced off it quite dramatically. As a result of that bounce, we saw a decrease in the dollar overall against other currencies. And so we saw the euro, the pound, the Australian dollar, gold, etc., all begin to rally. Now, what's going to happen and what is the plan? That's the question. So we've bounced off there. Often the markets don't change direction immediately. So if we are to find medium-term support over here for the dollar, and see the dollar begin to rally, it's very often the case that the market will retest that level, at least try and retest it before moving back up again, or on a retest and failure of that level, the market could move down to the next support level, which is at around 103.80, and perhaps even down towards 102. But I think we're going to need to retest that level early in the week, which means that the dollar will decrease, and therefore we'll see further increases in the euro, in the pound, in gold, in Australian dollar, and also in the stock markets, in the Nasdaq and the S&P. So that's what I expect to happen. Possibly the very first part of the week, in other words, Monday or Sunday night, which would be the beginning of the Asian session, we'll see this dollar index begin to rally just a little bit up, perhaps a little higher, and there's pretty obvious resistance above us, and I can draw a line in there, and we can kind of get an idea of where that is by simply putting in a horizontal line at these two lows here. If you have a look at the chart there's a low there and there's a low there. So that's an area where there's natural resistance currently, which lies just above us at 107.50. We're at 106 now, 106.80 actually at the moment. So that's about 1% above us. And then we've got 105, which is the area which I expect us to retest, which is 1.5% below us. So we're right in the middle right now. So we're kind of in a no trade zone at the moment, which means we can just sit and wait to see what's going to happen. Now, I think what's going to happen, and my plan is, which could be completely wrong, of course, but it seems logical to me and likely to me that we'll potentially retest 107.50 on the dollar index and then move down to retest 105 and potentially make a double bottom over there. So we've got about a 1% above us on the dollar and a 1.5% move below us before we're going to find out whether this support can ultimately hold. So how does that translate to currencies? Well, if we do move up on the dollar index slightly higher, that means we'll probably see a bit of a dip in the euro, the pound, and we don't want these lines here. I keep on drawing them in. Let's remove that. So we'll see a slight decrease in the euro and the pound and the Australian dollar. Let's just remove that one as well. So a decrease in all of these, a decrease in the Nasdaq, and a decrease in gold before then beginning to rally later on in the week, perhaps late Monday, Tuesday, or Wednesday. So that's my idea. So where should we get to if the dollar does move up by a percent and a bit, really, up to that red line? Let's call it 1%. So that's about 100 pips on the euro, 100 pips on the pound. And we're at 103.21 on the euro right now. So we'd expect to get down to about 102, which is where this red line is, or just thereabouts. And that would be a great place to buy the euro. So my plan is for the euro to move down to around about 102. You could try and trade that if you wanted to. If we break beneath this support here, and that's something I'll be looking at, particularly at around 103 or this line here at 102.80. If we break beneath those lines, hold beneath them, retest them from underneath successfully, and then move lower, we should head down to 102-ish on the euro. So that's what I'll be looking for, a move down to there. Might trade it short, I'm not sure yet. I'm not particularly fond of trading breakouts. I like to trade reversals, but we might have a chance to trade this short on a move down to around about 102, and then I'll look for a change in direction there, and then a move back up. And we'd expect to move back higher than this current level up to the point where the dollar index drops back down to 105. I hope that all makes sense to you, but I think we could get the euro up to about 105, 105.50, perhaps 105.80, somewhere around there, and then a resumption of the move down again. So to summarize all of that slightly complicated nonsense, we want to see the euro drop down very early in the week down to 102, bounce off there, rally up to 105.50, 106, and then move back down from there and start to head back down towards parity. And the same sort of thing for the pound. We want to see this drop down. Well, we want about 100 pips or so, 150 pips on the pound, and we're at about 1.18. We'll call it 1.19. So we want to get down to about 1.18. Maybe 1.1750, that's where that line of support is. So that's perfect. So I'd expect the pound to move down to that support, which is also where this is an hourly chart, by the way. Sorry, I'm switching between hourly. I was on daily charts. We're on hourly charts now. I'd expect us to move down to somewhere around this level, one of these two support levels on the pound, before reversing and beginning to move up, and then making a new high, and then changing direction yet again. So could be a little bit seemingly choppy. Same sort of thing with the Australian dollar. We want to see this move down, perhaps down to that level, 100 at 0.6630. I'm mixing up my decimals again, as always, and perhaps even 0.6540 for a reversal, a move back up, slightly higher high, maybe up to 0.69, and then down again for a resumption of the uptrend in the US dollar. And that all ties into what I've just said earlier on the dollar index. Same sort of thing on NASDAQ. So bearing all of that in mind, we want to see the NASDAQ move down a bit, about, I don't know, a couple of 100 points, something like that. I think we need to fill in some of the space here that was left by this big rally. We still haven't done that. So it'd be nice to just take up some of the supply, meet the demand and supply requirements in this level here, because we haven't had anything since then. So it'd be good to fill some of that in. So we could get a move back down to 11,400 or 11,200, somewhere like that on the NASDAQ before a bounce, another move up, maybe a new high up to 12,400, 12,600, 12,500 before a move back down in the NASDAQ to resume a slightly more aggressive downward trend. So NASDAQ looking to buy, dips down to here. You could be selling into that, of course, if we perhaps break through the support, but we'd be looking for dips down to this sort of level at 11,200, maybe only as shallow as 11,400, and move up to a newer high up to about 12,400, and then a resumption of the downtrend on NASDAQ. Same sort of thing on gold. We want to see the gold price move down a bit. It would be perfect, actually, if we got down to 1,730, 1,720, which is also where these moving averages are starting to congregate, and it's also where the 38% Fibonacci level is. We could get as low as the 50% Fib at 1,700. I think those would be perfect opportunities to buy gold for a rally back up to at least 1,780, maybe even up to 1,880. 1,780, 1,880. So, and then perhaps a move down or a consolidation in the gold price. I think gold will behave slightly differently. There's obviously an intent to buy gold. Well, a lot will depend on the dollar and the stock indices and the risk situation in terms of the overall markets and the bond markets and so on and so on. Gold, of course, doesn't like to strengthen in these sorts of markets too much, but we'll see what happens. There might be a change in sentiment in gold. Same sort of thing, though, there. Looking for a dip down to 1730, 1700 perhaps. 1730 would be beautiful. I don't think it's time to be buying gold right now. I think we should be selling it into these levels, if anything, and then looking for a reversal of those levels and a move higher. This is a day chart on gold, by the way. So you can switch to your hourly chart to have a look at a closer sort of view. You can see the hourly chart starting to look weak. We had a sort of a triple top there, which I had my eyes on last week. We're making lower highs and lower lows since then, and that looks like it's set to continue down to some of these levels, which you saw on the daily chart. And I think that's the plan, really. So if you can make sense of all of that, you should have a good trading week ahead of you. It makes sense to me. It might not make sense to a lot of other people, but there you go. I think that's a pretty good plan, and I think it'll give good trading opportunities. Remember, it's only a short week, so we've got 3 or 4 days at the most. Well, the rest of the audio got cut off there for some reason. I think my software malfunctioned, but the rest of it was just to say, well, happy Thanksgiving for those of you celebrating on Thursday, and I'm sure I'll update you before then in any case. So have a great trading week, and I'll speak to you soon.